Welcome back. More and more homeowners are abandoning home insurance because of skyrocketing costs. According to Bankrate, the national average for home insurance jumped 20% last year to more than $1,400 annually, and that's just for a $250,000 home. The jump in premiums is forcing some owners to forego insurance altogether, while others simply think it's a bad use of money and they'd rather invest that capital instead, a strategy that obviously comes with high risk. Here now to explain and react are Angie Newman, portfolio manager at UBS Private Wealth Management, and Karen Collins, vice president for property and environmental at the American Property Casualty Insurance Association. Welcome to both of you. Angie, I'll just start with you. And are you ever giving people this advice? Or
Absolutely not.
I can't imagine
not something
it.
that we lead with by any means. But as you said before, it's provocative. It's a hot topic. It's real. It's happening. And so we, as financial advisors, we work from a planning perspective. We look at cash flow analysis, the best use of funds from an estate planning, a tax planning, investment planning. And we have to understand that the client really does understand the kind of risk they're taking.
And you're based in New Jersey, but I imagine you might have clients,
Yes, we have lots of clients in Florida.
We always think of this as mostly kind of a Florida or a coastal problem.
Region for sure.
Is it? So give us some scenarios. What are people coming to you with? What kinds of decisions are they making if this really is popping up where people are saying, oh, by the way, I'm not paying my home insurance premium?
Yeah, well, it started by them saying, listen, a flood of investors came to the market during COVID, bought a home in a coastal region, paid what they thought was a reasonable insurance amount, and then come a year later, their insurance company drops them. They're simply not doing that residential business in the coastal area. So then they're scrounging for an alternative. There are very few out there, and when they do finally find one, in some cases, the premiums are double or triple what they had expected. So they're coming to me saying, wait a second, isn't there something I can do that's a little bit different than that? Again, this is not something that we recommend across the board. I would say there's a narrow demographic that meets the criteria that this might be appropriate for. But usually we say, it's a home that obviously cannot have any debt against it, no mortgage. Usually it's not your primary residence. It's not something that you rent out. You don't want renters in and out of there, which could increase the odds of needing to have a claim. And you take the cost of a rebuild, you take the cost of the contents, and you decide if that's money that you are willing to lose.
Right.
If you lose that money, is that going to make or break your lifestyle or your family's lifestyle?
Karen, what does it mean for your industry if a higher than normal percentage of people are simply foregoing insurance altogether?
The cost of home ownership we know is definitely including for insurance, and that is absolutely a strain on insurance affordability and availability, presenting a serious concern. We as insurance companies are advocating for solutions to really try and help address these increasing costs that families, individuals, and business owners are facing. This is the economic safety net that helps rebuild homes, neighborhoods, and communities, and it's really, truly vital that that safety net remains available and functioning.
So what can they do? Okay, so let's take maybe not the example of someone who's choosing to go without it, but someone who says, I literally don't have $3,000 or $4,000, whatever $1,000 the number is a year, and so I'm going without. Are there any other options for them?
We certainly don't want them to forego insurance if they do have a mortgage, because they could obviously lose everything. If they choose not to purchase insurance, it is possible that their lender may place insurance for them. It's referred to as lender-placed insurance, and it's generally a lot more expensive than the coverage that you might find available in the admitted insurance marketplace. So we do not recommend that, and there's generally less protection within that because it's designed to protect the structure, the lender's obviously investment. Instead, homeowners should really work with their insurance company or agent, including looking into maybe the state's fair plan for coverage, or take other solutions to maybe help reduce your premium costs, such as reducing your deductible, or maybe looking for other discounts that might help reduce your premium itself.